Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Dover Corp. Quarterly Report. Dover Corporation offers a diverse range of businesses and services worldwide. Some of the key areas include equipment and components, consumable supplies, aftermarket parts, software and digital solutions, support services, vehicle aftermarket equipment and software, aerospace and defense products, industrial winch and hoist systems, fluid dispensing solutions, radio frequency and microwave filters, and switches, signal intelligence solutions, soldering solutions, fuel storage and transport components, retail fueling and vehicle wash establishment operation, precision marking and coding equipment, product traceability solutions, digital textile printing equipment, specialty, pumps, connectors, flow meters, fluid connecting solutions, plastics and polymer processing equipment, refrigeration systems, commercial glass refrigerator and freezer doors, brazed plate heat exchangers. These businesses and services cater to various end markets, including vehicle aftermarket, aerospace and defense, industrial manufacturing, textile and residential climate control. The decline of Dover Corp stock price by over 8% in the past year can be attributed to several factors, particularly its earnings reports and revised outlooks. The company's lowered full-year 2024 outlook, after beating adjusted EPS and revenue estimates for Q3 2024, was a significant contributor. Additionally, mixed results from subsequent quarters, including Q4 2024, CONE 2025, and Q2 2025, further impacted the stock price. The sale of its Environmental Solutions Group, ESG, business in 2024 also led to a reclassification of the company's operations, resulting in reduced adjusted EPS guidance for 2024. Furthermore, Dover's core business underperformance, disappointing organic revenue growth, and shrinking returns on capital have raised concerns among analysts, suggesting that acquisitions may be necessary to stimulate growth. These factors collectively contributed to the decline in Dover Corp stock price over the past year, with a significant drop of -9.29% as of October 23, 2025. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by acquisition-related growth, organic revenue growth, favorable foreign currency translation, and customer pricing. These factors contributed to a significant increase in revenue across various segments, including the Clean Energy and Fueling segment, Imaging and Identification segment, and Pumps and Process Solutions segment. On the other hand, revenue decline was mainly due to organic decline, disposition-related decline, project timing issues in certain product lines, and headwinds from European residential heat pumps and refrigerated door cases. Geographically, revenue growth was observed in the United States, plus 2.4%, Europe, plus 14.6%, and Asia, plus 7.3%. Net income and profit margins. A tale of two trends. The financial summary reveals a mixed picture of net income and profit margins. On one hand, net income took a significant hit, decreasing by 64% from $449 million in YTD 2024 to YTD 2025. This decline is also reflected in the quarterly numbers, with a decrease from $347,100 in Q3 2024 to $301,996 in Q3 2025. On the other hand, profit margins showed an upward trend. The gross profit margin increased by 160 basis points to 40.1% for Q3 2025 and by 200 basis points to 40% for YTD 2025. Similarly, operating earnings margin rose from 17.2% in Q3 2024 to 18.1% in Q3 2025 and from 15.6% in YTD 2024 to 17.2% in YTD 2025. The reasons behind these contrasting trends are not explicitly stated, but the data suggests that despite a decline in net income, the company's ability to maintain profitability has improved. This could be attributed to various factors such as cost-cutting measures, efficient resource allocation, or strategic pricing decisions. However, further analysis is required to fully understand the underlying causes of these changes. The company is generating positive operating cash flow, a significant improvement from the previous year. In 2025, the net cash provided by operating activities reached $794,059, a notable increase of $145.2 million compared to 2024's figure of $648,881. This upward trend indicates that the company is successfully managing its finances and generating sufficient cash flow to support its operations. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, there is a mixed picture. While short-term borrowings increased by $590, long-term debt saw an increase of €76,507 for the 1.25% 10-year notes and €63,671 for the 0.75% 8-year notes. However, net long-term debt increased from $2,529,346 to $2,670,362, indicating a total increase in long-term debt. Additionally, total long-term debt decreased from $2,928,757 to $3,070,278, which seems contradictory. On the other hand, interest expenses have decreased significantly. Interest expense decreased by 20% from $34,128 in 2024 to $27,239 in 2025, 9 months. Furthermore, a more substantial decrease was observed for the 3 and 9 months ended September 30, 2025, with a 67.4% and 71.1% decrease respectively. Overall, while there are some inconsistencies in the debt level data, it is clear that interest expenses have decreased significantly over the past year. The company's financial performance varied across different segments and regions. The well-performing segments included engineered products, pumps and process solutions, clean energy and fueling, despite a decline in Q3, and imaging and identification. These segments saw significant revenue growth, with some experiencing double-digit increases. On the other hand, the poorly performing segments were clean energy and fueling, excluding YTD, imaging and identification, and climate and sustainability technologies. These segments experienced declines in revenue and earnings, with some seeing decreases of over 15% in Q3. Management is optimistic about the company's outlook, expecting year-over-year organic performance to improve in the fourth quarter. This improvement will be driven by solid demand trends in key businesses such as aerospace and defense, as well as pricing actions. The company also expects to remain compliant with debt covenants and maintain sufficient liquidity through various financing options. Overall, management is confident in the company's ability to achieve continued organic growth in the fourth quarter. The company has made significant transactions through acquisitions and divestitures. On the acquisition front, it has purchased Marshall Excelsior Company and Clean Energy Platforms. These moves are likely aimed at expanding its business scope and capabilities. On the other hand, the company has also engaged in divestitures, which involve selling off certain operations to focus on core areas. The gains from these disposals have been substantial, with a total loss of $666 million in 2024 and 2025 combined. The company's financial summary reveals that it has engaged in 2 key shareholder return initiatives. Firstly, the company has paid dividends to its shareholders, as indicated by multiple references throughout the document. Secondly, the company has also bought back shares from the market, further demonstrating its commitment to returning value to its investors. Concerns about inventory buildup and supply chain disruption are evident in the financial summary. The data reveals a significant increase in raw materials by 18% and finished goods by 15%, indicating a potential surplus. Furthermore, the net inventory has increased by $176.9 million year-to-date, suggesting that companies may be struggling to manage their stock levels effectively. These trends raise concerns about the efficiency of supply chains and the potential for disruptions if not addressed promptly. That concludes the financial summary for Dover Corp. Feel free to comment below, and I will be happy to answer them when possible.